Trading Addicts. This is the Option Addict from www.tradingaddicts.com. It's been a busy market, and I've been a busy guy, so I've slacked off on the video production capabilities. But as you all know, I've been banging out Watchlist, been doing them in written format, but tonight I figured I'd mix it up a little bit, go back to video. So let's go ahead and get started with a little bit of market analysis. You know, we're at a pretty peculiar point here in the S&P 500, and that brings us right up against the old January and February highs right here at about 875. And I mentioned that as a short-term price target in the coming weeks, but if you look at small cap, if you look at tech, we've already stretched beyond those areas. So I don't know if this area starts to act as resistance this week. That's what I'm watching for. Of course, if we take that out, I'm going to remain net long as I have been throughout this market. But if we start to pull back here, I think you need to pile on a couple of shorts as prices are likely to pull back. My first target would be right around 850 or so as another dip buying opportunity. But if that level breaks, there's a potential to see another inverse head and shoulders pattern develop through here. So if the bottom gives out at 850 or so, I'd look for an extended pullback down to about 820, 815. But so far, so good. Continue to play with this trend. Prices pull back around 850 and that level holds. Buy into that dip. Look for a breakout in the coming days. The one pattern I'm watching pretty carefully this week is in crude oil. Whether you look at the USO, whether you look at crude futures, you can see that there's a pretty good triangle pattern developing over the last couple of weeks. Now, I'm waiting for prices to actually break out of this pattern rather than taking an anticipatory approach. So, if prices do break out, I'm looking to get long, and I've got a list of stocks that I'd prefer that you look at in the oil patch this week. You'll see this pattern developing in a lot of stocks. Today we're going to look at XTO, EOG, Devon, couple others, but this movement here should be the next big move for oil service stocks. And if you've been following the OIH lately, you'll notice that it made a pretty important move too, getting outside of those recent highs of about 87.5. Now the watch list this week is pretty short and sweet. I've got a smaller list of buy the dip and sell the rip candidates and only a handful of potential breakouts and breakdowns. Let's take a look at those first. And now back to the watch list. One of the most predominant patterns you're going to find out there is going to be the triangle. And I'm going to run through as many of these as I can really quickly. This isn't going to be all of them, as there are plenty of these patterns out there, but these are the few that I found is pretty important. We'll start in energy. And the first one we're going to look at here is XTO, where we actually saw a breakout. If prices do pull back, I think you got to buy the dip or the retest right at about 34.5. as prices could gather enough momentum to get back up here into the $40 range. Next is EOG. Don't have a break yet, but we have a lovely looking pattern developing here. A breakout of this sends the stock back into the lower $70 range. Next is Devon, ticker symbol DVN, where we already have a breakout. So if you get a retest back down to about $50, that is where you want to buy. Let's move over into the shippers. We're going to look at OSG, which is down near its lows, but banging up against resistance up at around 26.27. A breakout here sends this stock back to about 30 in the short term, maybe even mid-30s over the next month or two. Also, ticker symbol NAT in the shippers. I like this one quite a bit. Not a huge pattern, but still pointing to about a $3 move, which sends this stock pretty close up to its prior highs. Mid-$30 level is what I'm anticipating. Next, let's look at US Cellular. Same pattern developing here. Looks like it wants to break down, though. So this might be a pretty good bearish candidate if prices take out that $34 level. Next, I'm even going to throw Nucor on the list. And you can see this looks almost more like a pennant after a real sharp move in prices. Still like the material sector quite a bit. This move here in Nucor, if you can buy a dip back down to about 43, this stock's going back up to its highs at about 48 in the short term. So look for a dip at 43. Let's go over into financials. Credit Suisse. We've already got the breakout and we had the retest here on Friday. So if this level holds right here at around 34, 33.5, think you got to buy that. Now, also looking at Morgan's got earnings Monday, Tuesday, same thing developing here. Earnings will probably cause the breakout. In fact, I might even try to go out there with a really small position size and anticipate a strong reaction on earnings. But a breakout here puts Morgan into the low $30 range in the coming days. A couple others, we can look at Philip Morris. You can see the same thing going on here, but this one looks a little bit weaker. Might be a good potential breakdown to play. And then also ticker symbol ACV, which also rolling off of its highs, looking a little bit weak, but we'll see how it trades. So aside from triangles, here are a couple other things I think you got to watch. Ticker symbol RGA, one of the few head and shoulders patterns I've been able to find. And you have to look at an intraday chart to really see this. But, shoulder over here, end of March, ran up to about 36. Lower shoulder through here at about 34, and then breaking down. So if prices rally back up to around 33, that's where you got to short it for about a 10% move, taking the stock down beneath 30. Biotech looking horrible. Ticker symbol OSIR, one of those stocks that's kind of got a bear flag through here. Cheap stock too, so look to short it, but pretty volatile too, so might be out of your league. Inverse head and shoulder pattern on FLR. I love the building stocks, heavy construction stocks right now. As you've noticed, the XHB home builders are on a tear right now, and I think that's going to lift anything construction related. I'll throw FLR into that mix. And anything in heavy construction right now. Let's go to Telcom. Ticker symbol T, which is AT&T. Telcom hasn't been participating as much, but I'm watching for a move here in AT&T, and I'm also going to put Verizon on that list because I'm watching prices in Verizon at a really unique reference point, sitting right here at support and just slowly working their way out of a beautiful bull flag, which is not a lot of conviction to the upside yet. So I like that as well. All right, folks, that'll do it for me in the watch list. This week will be predominantly run by earnings, so look for some volatility. Rather than playing direction, try to keep yourself balanced in terms of your portfolio. Don't get too overweighted to one side or the other. You might want to scale back this week. As I said, earning announcements are going to be very, very important this week and going to drive market direction. So anything but the best in terms of guidance, we might pull back a little bit. So as always, have a great week, folks, and don't forget to visit us at www.tradingaddicts.com. This has been The Option Addict. That's been my watch list. Thanks for watching.
Sometimes you're flush and sometimes you're bust, and when you're up, it's never as good as it seems, and when you're down, you never think you're going to be up again. But life goes on. Remember that. Money isn't real, George. Doesn't matter. It only seems like it does.